All right, welcome back. Weekly stock market update. What a week. If you watch my previous video, you'll be pretty much up to date to what's going on. So today we're going to talk more about what happened today, this Friday in the market. We already know, we've already gone over the tariffs. We've already gone over the bloodbath that's started since the tariffs, but we've got a continuation and it's even worse today. So we've got a $7 trillion loss in the U.S. stock market since Wednesday. Wild, huge drop. We'll look at some charts. We'll look at the heat map in just a moment. But let's get over some of the news from this morning. We did have the jobs number, which actually came in much stronger than anticipated. So 228 jobs added in March, surpassing expectations 140,000. That's good and bad at the same time. We almost are rooting for jobs to start to soften so the Federal Reserve can cut. Now, Jerome Powell did have a speech today. I thought he did a great job. He stayed out of politics. He didn't comment on a lot of the tariffs, but he did say that it was larger than expected and it could result in higher inflation and slower economic growth, and it's going to cause them to have to hold their policy a little bit longer because they need to wait and see how these tariffs will play out. If it's going to bring inflation back, they don't want to cut rates and then have tariffs raise inflation. They don't know if it's going to either raise prices or slow growth. What's going to be the bigger mover when it comes to the tariffs? Really, nobody knows. So they're going to have to be a little bit slower when it comes to cutting rates. And that's not exactly what the current administration wants. Current administration did come out today and tweet, Jerome Powell, cut rates now, do it now. But Jerome Powell can't do that. He would be acting in what looks to be a political manner. He's got to make decisions based on the data, and the data is lagging. So by the time they cut rates, we're probably already going to be in a recession. They're going to be too late to the party, as they always are, just like they waited too long to cut interest rates. They're going to probably end up waiting too long. They waited too long during the pandemic to raise rates to cool inflation. Inflation was already rip-roaring and entrenched. They took too long because the data that they look at is not current data. It's always backwards looking. The analogy I like to use here is they're trying to drive by looking in the rearview mirror and the windshield is blocked because they're looking at things that have happened in the past. No one can look into the future, but they have to go based on the data that's already happened. So other than that, he said the same thing. Stable employment, low prices or stable pricing, stable employment, that's their mandate. Right now they see the jobs numbers being okay and they see inflation cooling, but they won't cut rates until they see the jobs cool off. So it's kind of like stuck between a rock and a hard place. The other news this morning was escalation of trade tensions with China. China imposed a 34% tariff on U.S. goods effective April 10th, and that's a retaliation to Wednesday's tariffs on China. They are also going to be restricting rare earth minerals from being exported from China. So apparently there's also other components like electronics and defense that they're going to be limiting our access to. So this is the beginning of the retaliations. We'll see where it ends or what's next. So that's basically the news we got today. Let's go ahead and look at some charts. Let's look at the heat map because it was another bloody day today. Holy smokes. You can't even find any green on this. So red all over the place and a huge drop. The sad part too is we are closing on the lows 2 days in a row. So we look at the Nasdaq, we are just free falling at the end of the day. And what that tells us is that big institutions, they put in their orders at the beginning of the day and at the end of the day. So they put on market on close orders. So they put these orders in, say buy at the market at the close or sell at the market at the close. And these are selling orders on the close. So their clients are saying, get me out, and they have to execute those orders. And that's why we're seeing these waterfall crashes at the end of the day. We're watching it live. If the Nasdaq hits 7%, they'll stop it. They'll trigger the circuit breaker, and we're almost there. This is pretty nuts. So the Nasdaq down 6.7%. The market is closed, but the futures are still trading after hours. The S&P down 6.5% and counting. I really want to see if we hit 7%. This is distracting me. Okay, let's keep looking here. So Nasdaq, S&P falling off a cliff. You've got the Dow Jones down 6% and counting. You've got the Russell 2000 down 5% as well. Gold is down 2% today. Little bounce from right now. Now, surprising me is Bitcoin is up on the day at 83,000. We'll see what happens this week. I still think we're probably due for a sell-off on Bitcoin and the crypto markets, because they're going to be open on the weekend. The stock market's not, and people are going to be looking for liquidity is my thought process. But I mean, I'm not here to make predictions. I'm surprised at the strength here for the crypto markets. Oil, another big drop today, down another 6.5%. We hit $60 a barrel. That's unbelievable. Let's look at volatility. We are skyrocketing on volatility. The last time we saw these numbers was, looks like in August. I'm trying to remember what that was in August 2024. This must have been the Japanese carry trade blow up. Let's see. Let's zoom out a little bit more. So when the VIX is high, it's time to buy. This is the pandemic spike. So we're about halfway when it comes to volatility to reaching our peaks for the pandemic crash. So definitely something to look at, but no cool off in volatility. We are just continuing to climb up. Let's take a look at interest rates. The 10-year yield was down big this morning, but we're climbing back up. I think this has to do with Jerome Powell's speech and his rhetoric at we're going to have to hold until we see the data. They probably should cut, especially with all of this, but they can't because they would look political. We already talked about that. So anyways, when it comes to the interest rates, this is a big bounce back up, but we've had just a handful of days of free fall down. And we are starting to retrace back up near that 4%, but we got down to 3.86 on the 10-year yield. All right, now let's get into some individual names. Google down 3% today. I did not buy Google today. It was at my buy point at 148.50. I did not buy. I will look to, I'm going to do a lot of research this weekend and adjust things because everything moves so quick. I have been doing a decent amount of buying this week. Google was not on the list. I'm going to move this buy point down, probably to 136 or so is what I'm going to be looking at. Maybe 132. I like Google a lot. I like this valuation here, but there's a couple other stocks that I like a little bit better. So yeah, I like this 132. I'm going to be looking at their valuation and things like that over the weekend. But Google has been holding up a little bit better than some of these other mega cap tech names. So I've been buying the ones that are getting killed a little bit more. Speaking of which, Amazon. Bought a lot of Amazon this week. My next buy point is going to be down at 150. I'm going to move this down here this weekend as well. But big drop down this week on Amazon. Some rumors of Amazon buying TikTok emerged this week. I believe also that the TikTok deal was supposed to get done this week, but they filed an extension for 75 days or so. That could be a crazy bidding war. Amazon couldn't buy iRobot last year. The fact that they were able to put a bid in for TikTok blows my mind. So we'll see what happens there. I have been buying some VOO. This is the S&P 500. And we are already getting next to my buy point, which is going to be around 450. Triple Qs. I did buy some triple Qs. The Nasdaq 100, which is in a bear market. We are in a bear market for the Nasdaq 100, down 22%. Real quick, let's take a look at the S&P. We've got to be down 15%. Man. Yeah, we're definitely down 15%. We are down 17%. So we are already almost in a bear market in the S&P 500, and the Nasdaq looks like it's already in a bear market. Yep. So Nasdaq and Nasdaq 100 in a bear market. Welcome to the bear market, everybody. Coinbase holding up a little bit better because of Bitcoin. Nvidia 95. Bought some Nvidia today at 95. My next buy point is 85. This is crazy. These are some crazy falls in the market. Tesla, haven't bought any yet. Closed out a couple covered calls, down 10% today. It seems surprising how well Tesla held up yesterday. I felt like it was just a matter of time for it to fall off a cliff. Here we go. Now, the longer this goes, these sell-offs, people are going to be forced sellers, margin called. People are going to be selling things to go buy other things. So there's going to be just some forced selling that continues to go on the longer we have these multiple 5% down days, potential circuit breaker days. We're still almost there on the Nasdaq, 6.75%. Costco, I did buy a little bit of Costco today. It's down 5%. My next buy point is going to be under $900 for Costco. Let's see, Chipotle, haven't done anything with Chipotle. Meta is down 5% as well today. Man. The SMH, 179. My re-entry point for the SMH is going to be under 158. Boy, we've really fallen off quickly here for the chips. Let's see, Shopify down again another 7%, SoFi down another 10%, Palantir 12%, Target flat on the day today. This is already, Target's already been just beaten down. It was 180 not too long ago, and now we're 95. Novo Nordisk, I'm going to be doing some research on Novo Nordisk. They're one of the larger Ozempic dealers, we can call them. Occidental Petroleum, it's a great company, but with the price of oil, their cash flow is going to be down in the dumps. Now, these cyclical names, these commodities cyclical names, you want to buy them when they are just troughed out. We're not quite there for Occidental. So I'll have to do some research on this. There's only so many stocks I can own and buy, but definitely with oil being kicked, it's going to not be pretty here. Microsoft down 4%. Let's see here what's next. Where's Apple? Jeez. Wow. Apple down another 7% after a 10% down day yesterday. That's a big move, and this has a lot to do with the retaliation Chinese tariffs. To me, Apple under 170 is a great buy. People are always going to keep buying iPhones. Again, this is not financial advice, but I'm going to start looking at Apple. This is one that I don't typically own, but at the right price, I'd like to hold some Apple for the long term. Wow, I haven't seen AMD down 85. Let's keep scrolling through here. Intel, what happened? Intel was up yesterday. Now it's down 11.5%. So just bloodbath all over the place. Who knows what next week will bring? Intel's almost back to its 52-week lows. But again, there's so much uncertainty here. There was potential rumors of Vietnam tariffs being lifted if a deal could be reached. So maybe we get some of that relief news next week of, hey, we worked out a deal with this country. We're going to remove restrictions here. We will have to wait and see. Again, this is not the time to be panicking. This is the time to be sticking to your plan and executing. There's a lot of noise. There's a lot of movement. Things are moving real quick, real fast, and just write things down, have your plan, and stick with it. I am encouraged that I have heard from a lot of people they're looking to put money into the market It feels like you're throwing money into a burning fire pit, and the more you watch the news, the more uncertainty and fear could creep in. But I'm here for the train America long term. Let's zoom on out here. There's been many corrections, there's been many dips along the road, but this thing chugs along over the long haul. Look at the S&P 500. So unless things are going to completely devolve for our country, I want to get invested when we have big, sharp down moves like we have right now. Real quick, let's just take a look for the pandemic drop. What was the size of that on the S&P? So the pandemic drop was about 30% on the S&P, 35%. So, you know, we're well over halfway there. So I hope that brings some calming to people. But really, that's all I got for this video. Next week will be a busy week. It's going to be a busy weekend looking at a lot of companies, looking to see what's going on out there. Me personally, I did do some buying this week, as I mentioned. So next, I'm going to be scouting out my next buy targets. I'm going to be paying bills this weekend and seeing what kind of funds I could be moving into my accounts as well, and getting ready to deploy more cash for the next leg down if we get it. And if we get sharp moves to the upside, I'll be looking to hedge my portfolio by selling some more covered calls. I still have some covered calls out there on some stock. In case we keep going lower, I'm able to continue to build my cash position there by closing out those calls. But there's a handful of stocks where if we get a nice relief rally, I'll be looking to lay out some more covered calls to help hedge my downside, especially for the stocks that I recently just bought. I'll be looking to hedge those buys by selling some calls against that. So that's another way that I can stomach buying. I can partially hedge myself if we do get some relief rallies. I don't think this will be a V-shaped recovery, but I'm not here to make predictions. I'm just here to see what the market is doing and act accordingly to what we are given day to day. So that is what I'm doing. Again, not financial advice. I hope everyone has a great, safe weekend, and we will see you for another busy week next week. All right, peace out.